Hello and welcome to Edison TV. Today I'm joined by Tom Alzin, who's spokesman of the management board of Deutsche Beteiligungs AG, a well-established player in the German private equity mid-market and a go-to partner for private company owners. Deutsche Beteiligungs AG is a listed private equity investment and fund management company that invests in mid-sized companies in Germany and neighboring countries, such as Italy, through buyout transactions and growth capital financings. Tom, thanks for joining us today.
Thank you, Milos.
Maybe you can start by outlining the key advantages of investing in the private equity mid-market in terms of deal origination, value creation, and exit opportunities.
Yeah, thank you for the question, Milos. First, let me start with the market structure and market growth. The German private equity mid-market includes companies with enterprise values between 50 to 250 million euros. There are many of these so-called Mittelstand companies, and often they are not stock listed and family owned. The main growth driver is clearly succession issues of family owned businesses for us. But if we dive a little bit deeper, compared to other private equity markets, the German private equity mid-market is characterized by a high share of primaries. These are transactions not executed between financial investors. Indeed, 67% of total transactions carried out in 2022 were primaries. And this is just an evidence of how healthy the German market is here. Value creation mainly depends on the business model, and we prefer companies with strong market positions, because with such solid foundations, the value creation strategy can be put to work effectively. Often, despite the smaller size compared to large caps, German Mittelstand companies claim strong market positions, which makes them true hidden champions. And this is a very attractive feature of the mid-market here. Regarding deal origination, company owners who consider a sale of their business value DBAG's track record and reputation. I mean, we've been founded in 1965 and IPO'd in 1985. DBAG's reputation cannot be easily replicated by its competitors. Also, 2.6 billion euro assets under management and a really tight focus on mid-market companies differentiates us from competition. As a result, DBAG is typically perceived as the preferred partner. Regarding exits, it usually takes 4 to 7 years before the further development of a portfolio company leads to a significant increase in its profitability, size, and hence its value. Historically, DBAG's preferred exit route, and we're talking here about 2/3 of our exits, with strategic investors.
Thank you, that's very helpful. Now, DBAG's portfolio has changed quite a lot over the years with the growing share of the so-called growth sectors. Maybe you can shed some light on how your portfolio composition changed and what your priorities are going forward.
Yeah, happy to do so. So in 2012, our portfolio reflected pretty much the German industrial Mittelstand, with clearly more than 80% of our portfolio companies stemming from pure industrial sectors. But DBAG has evolved since then. Companies from the healthcare, broadband, telecommunication, and IT services, as well as software sector, have become increasingly important for us. Also, in 2022, we invested primarily in sectors with structural growth, such as IT services and software. These are little or only disproportionately affected by the weakening of the overall economy. The diversification helped us to compensate the volatility in our earnings in 2022 and in the COVID area of 2020 as well. It also has enabled us to carry out exits even in such challenging market environment as in the end of 2022, beginning of 2023. An example of a successful exit would be our investment in Cloudflight, which was agreed in 2022. Here, we realized more than 4 times the invested capital. And that took place in a very challenging capital market environment. So our strategic decision to enter the sector has clearly paid off. As at March 31st, 2023, portfolio companies from healthcare, broadband telecom, and IT services accounted for 46% of total portfolio value. This was almost on par with the share of industry and industry tech and industrial services, which they alone accounted for 44%. Right now, we feel very comfortable with that split for the time being.
Thank you. That's very helpful. Now, DBAG has delivered a quite strong long-term track record in terms of realizations. So maybe you can talk us through the key success factors behind this, and also, well, your major realizations in late 2022 and early 2023. You've already mentioned Cloudflight, but obviously there were also other transactions. So maybe you can talk about them as well.
Clearly, DBAG's track record of generating returns for its investors is very solid. In a nutshell, the key success factor for generating consistent and high returns from our perspective is an experienced team. DBAG's investment advisory team of 34 members, of which the senior members have 17 years of average private equity experience, is here a key asset. This experience is really hard to beat. Also, we have established clear processes when it comes to due diligence. And moreover, we have established a strong alignment of interests through co-investment by our senior team members, which is typically for the private equity industry. Regarding realizations, late 2022 and early 2023, Cloudflight, I already talked about it, but we achieved a high money multiple of in excess of 4 times, despite a challenging market, thanks to the robust demand in the IT services and software sector. On the other hand, PM Flex, here the buyer Hager Group, had a clear strategic interest in the company, enabling a realization for us in only slightly more than 2 years at a very attractive price. PM Flex also marked the first realization of an Italian portfolio company, adding to our track record. And Hightex, this realization marked the last exit of a portfolio company of DBAG Fund 5. Note that Hightex was among the companies within our portfolio with a high exposure to gas prices. So given the current environment, also this realization was what we think a very good achievement here. Regarding BTV Multimedia, this realization in February 2023 came after a successful buy and build strategy implemented through 5 add-ons. The transaction resulted in a money multiple of more than 3 times, which we also deem very attractive.
Thank you so much. Now, obviously in the current environment, investors are interested in understanding the liquidity position of the underlying companies within investment portfolios. Unlike venture capital funds, private equity players such as DBAG mostly invest in more mature businesses, which are profitable over the cycle. That said, companies within private equity portfolios tend to have a quite high leverage. So maybe you can talk us through the balance sheet position within your portfolio.
Correct. DBAG's focus is on mature business models with healthy profitability and good cash generation ability. Moreover, the degree of leverage differs from sector to sector. For example, our defensive businesses with a high share of recurring earnings typically have a very different leverage profile compared to more cyclical business models. As such, the leverage of our portfolio to a high degree really depends on its structure and also the nature of the portfolio company. As at March 31st, the share of companies with leverage net debt to EBITDA of 3 or higher accounted for 72% of total portfolio. This represents a decline from 77% as of March 31st, 2022. At the level of DBAG, the equity ratio is very high with 94%. So we feel very, very comfortable with that.
Thank you. And finally, it seems that the outlook for the German economy has improved somewhat in recent months, with the risk of a gas shortage diminishing, and supply chains gradually adjusting. So maybe you can tell us whether you see signs of improvement in market conditions across your portfolio, especially the holdings in the industrial services sectors.
Yeah, we have closely analyzed the situation for our portfolio companies already when the gas shortage came into existence in 2022. And in some, effects from the gas shortage play a minor role for our total portfolio. Portfolio companies with a high gas exposure account for only 3% of our total portfolio value. So this highlights the advantages of a more diversified portfolio structure, as I described it earlier. That said, supply chain disruptions are way more difficult to manage, and portfolio companies with exposure to supply chain issues account for 16% of our portfolio value, mostly stemming from the industry-related sectors. Overall, it's a mixed picture, and the visibility for the full year is still somewhat subdued by macro uncertainties, even though risks from gas shortages and supply chain issues are adjusting in some cases. So on May 11th, we published our first half-year figures, and our net asset value grew by 14% from October until March 2023, adjusted for the dividend payment. But we also published an updated guidance in April 23, expecting even more growth to come. So all in all, we are really quite comfortable and optimistic with respect to the development this year.
I'm Alzin, spokesman of the Management Board of Deutsche Beteiligungs AG. Thank you very much for your time.
Thank you, Milos.